Hey everyone, welcome back to the Chain Reaction Podcast. I'm your host, Tom Shaughnessy, a co-founder at Delphi Digital, an independent research boutique providing institutional-grade analysis on the digital asset market. One quick housekeeping item, this podcast is strictly informational and educational and is not investment advice or a solicitation to buy or sell any tokens or securities or to make any financial decisions. For full disclosures, please see the show notes below. Also, our listeners can visit Delphi Digital and use coupon code ChainReaction, all caps, as a special offer to access our research. The top crypto funds, analysts, and firms read Delphi Digital's research and analysis. With that out of the way, today I'm thrilled to have on Tyrone V, a managing partner at Noblebridge Wealth Management. The long story short is Tyrone is the crypto wealth manager of the future. Tyrone has decided to differentiate his practice by offering his wealth management services to the general public, unlike the majority of wealth managers and financial advisors who not only won't help or touch crypto assets, but frankly aren't up to speed on the space. It's great to hear Tyrone's journey, his unreal energy, and how he helps clients across the spectrum with their crypto assets. While normal routines like crypto custody, buying and selling, and what to do in certain situations is easy for crypto natives to understand, Tyrone is serving the needs of the wider population outside of the crypto echo chamber on what they need to do to get involved. We need to educate and help the global population who are not crypto native to get involved. That's exactly what Tyrone is doing every day. With that, let's jump into the episode. Hey everyone, welcome back to the podcast. I'm your host, Tom Shaughnessy. Today I'm thrilled to have a friend that I met on crypto Twitter, Tyrone V, who's a managing partner at Noblebridge Wealth Management. I like to think of Tyrone as the crypto financial advisor. Tyrone, how's it going?
I'm great, man. Thanks for having me. Again, let me start this off by saying I appreciate you and for having me on, sharing your platform with me. I'm really grateful. So yeah, excited to be here.
Well, Tyrone, it's a pleasure to have you on. So let's jump right in. Tell us, your story, how you got started in crypto, and we'll take it from there.
Yeah, so my story is an interesting one, right? Very circuitous route to crypto like most people. But I started out on Wall Street right out of graduate school at an investor relations firm doing, IR, PR, writing press releases, things like that. Didn't know anything about Wall Street. I walked on to Wall Street at 26 years old, literally didn't know what the stock market was, that it existed. And then from there, just started a really interesting journey, had a mentor there who worked for Lehman Brothers. And, he was like, you seem like a caged animal sitting here in a cube all day. Have you thought about the retail side? And I'm like, what's the retail side? So he was like, getting your Series 7 and becoming a licensed broker. And again, I had no idea what was going on. So he kind of walked me through it. I ended up getting licensed, getting my Series 7, Series 63 at a chop shop right there in Penn Station, where I learned to cold call and pitch stock and do a bunch of stuff that I hated that would ultimately be very fruitful for me in my career. And then from there, I heard about the wirehouses, right? If you wanted to work on Wall Street, you end up at a wirehouse. If you're a broker, right? A Merrill Lynch or Morgan Stanley or whatever. So long story, less long, ended up at Merrill Lynch in 2012, where I was in the trainee program there, and then was introduced to Bitcoin in 2015 by a friend of mine who was a Ruby developer. And the rest is history. 2016, I made the decision to start, working with startup founders, and I had an interest in startups, and those two things kind of went together. So I always joke with people, there's three things at Merrill you don't do. One, you don't talk about crypto. Two, you don't prospect younger clients. And three, you don't be an advisor of color. So I was 3 for 3. So my mentor there was like, listen, man, if this is what you want to do, you got to get out of here. And that was it. So I left July of 17. So, I'll be on the independent side here. July will be 2 years. So here we are. Now I'm talking to you. I made it.
Wow. No, that's an incredible journey. So, I really want to dig into kind of the differences between being a financial advisor at Merrill Lynch and then now being at Noblebridge and the crypto aspect here. I guess one of the main questions is, why avoid younger clients? I mean, are they just like they would come and go, or they not have enough money, or
right?
Why
Great question. So great question. So the issue is a couple things. One is at Merrill Lynch, there's a $250,000 minimum. So that right there is going to cut out most people. Not to mention young folk. And even if you could demonstrate to them that, listen, I have a client that's making $500,000 a year, but they're 30 years old, they don't have that type of asset base, they really didn't want to hear it. That's the first thing. The second thing is those that are in the decumulation phase of their lives, right, have all of the assets, the baby boomers, right? So the business model wasn't really built around, 25, 35, maybe not even 45-year-olds, right? You were supposed to go after all of the middle-aged white CEOs that had all of the money. So that's really what it was. And then also, I think the other thing was a business model issue. Even if you did get younger clients, which I did, they're not comfortable paying AUM because they don't, we can talk about this later on, but they're used to paying subscription or hourly or a flat fee, but AUM to them was foreign. So you really couldn't sell them on, oh yeah, you give me money, I'm going to charge you a percentage of that. And, I'll call you twice a year. It wasn't a sell that younger clients were going to go after. So that's really what it was. And I think the other thing was from an internal side, I realized that the technology was just antiquated. So the young clients that I did have were very frustrated by the fact that they couldn't send me a Dropbox link. Or that they, if I sent them a document that I had to send them all 150 pages, and I would have to tell them, go all the way to page 148, sign those 2 pages, send those back. But I have to send you enough paper to choke a horse. Like, it was just really ridiculous. So those are really, one from my side, but most of it, they just didn't really gear their business towards younger clientele for that reason.
Yeah, that's amazing. The older banks are getting so antiquated with their technology. It's just amazing how they're not keeping up to speed.
It was awful. I mean, when I was there, I left in 2016. They were still writing out trade tickets in 2016. Like, it's mind-boggling.
Wow. Yeah, that's not a good look. So when you're at Merrill Lynch, was there any crypto overlap there, or did you begin to think about, hey, is there any way that I might be able to allocate some of my clients or younger clients into Bitcoin? Or was it basically, from what you said, restriction-wise, it just wouldn't happen?
It just wouldn't happen. When I got introduced to it, it wasn't even a conversation in advisor meetings or whatever else. It really literally wasn't on my radar. It wasn't until, again, my friend was like, have you heard of this, that, or whatever? And when it took a while, right? I always tell people in crypto, you have 2 lives, one when you heard about it and 2 when you actually bought in and then actually bought it, right? So he was telling me about it for a while. And I'm like, man, we have no literature on this. It's not brought up at all. And then when I would mention it in advisor meetings, they would look at me crazy. Like, you can't, it's fake, it's this, it's that. Like, I literally would be told to, we can't discuss that, whatever. And then shortly after I left, they put out, some language about advisors not being able to talk about it. If a client hold it, they have to do it away, but advisors still can't, advise on it or whatever. But yeah, it wasn't even a thing. It was never brought up. And when I did bring it up, I was told not to, right? And there was no one else who knew about it or would even attempt to discuss it. But that just made me more intrigued of wanting to build my whole practice around it, because I saw the possibility. And a lot of the background on me, like, I had always been fascinated with fintech. So I'm like, fintech is going to destroy financial services anyway, as we know it, right? 2007, I always say financial services changed forever. What we're witnessing now is just the end of the beginning of how crypto is going to destroy the legacy financial system. One of the things that people don't talk about, and I'm forced to shed a light on, especially when it comes to financial advisors and when it comes to our businesses, it's not about whether crypto is an asset, a security, has intrinsic value, open financed, all of these things. It has nothing to do with that when it comes to asset management, financial advisors. What crypto is going to do to our business model is not, to say destruction is being kind. It's going to completely retool how and destroy and have to make advisors retool how we look at our business model. And I'm seeing that firsthand. But even if an advisor doesn't advise on crypto, what the crypto ecosystem is going to do as it gets developed, as you look at Facebook coming into the space, Microsoft, JP Morgan, the list is endless. As large institutions continue to adopt this, it is going to get crazy of how our clients, the experience that they have with crypto outside of the traditional markets, how financial advisors aren't even able to control that, and they aren't going to be able to stop it. So the clients now are going to have an experience with crypto, whether it's directly or indirectly, and then come to their advisors, and then they're dealing with bad, antiquated technology, bad service, slow transaction times, slow reaction times. And if financial advisors aren't ready for that, whether you embrace crypto or not, you're in for a world of hurt.
Yeah, that's amazing. It's like the banks are tying your hands behind your back because, you as an advisor want to innovate and build your book of business. But meanwhile, they're kind of stopping you. And one of the best ways that you could do that is investing in the new technologies.
Absolutely. 100%. Absolutely.
Insane. So, switching over to your, the crypto practice side that you have, within financial advising, I'm wondering, the clients that come to you, what's their average age are the ones that are interested in crypto? How do you sit down and talk with them about the technology? And then, after that, we could go on to, how you deal with allocating to it and percentages and stuff like that.
So I'm if I had to go average age, I would say right around 30. I mean, late 20s, 30. And they come to me. Shout out to Luke Martin, right? And I've gotten a few clients from him after doing his podcast, but they come to me through social media. They come to me because they know I'm not going to tell them to sell their crypto. They know I get the space, and they can get very nuanced with me. So a particular client that came to me through his podcast had a portfolio of alts that most financial advisors either would have laughed at some of the names or wouldn't have known. Like his head would have blown up at some of, Engine, Quant, some of these things that wouldn't even have known, but he was comfortable bringing it up to me and knew that, that I was, aware of them, right, and could speak to them. But long story short, so when clients do come, again, I have a conversation about what they own, why they own it, at least try to get a feel for why they own it, and then get a feel for what they're trying to do. So a lot of folks that are coming to me were traders or thought they were traders. Last year humbled them, and now they're like, okay, well, I need to become an investor, right? And I need to have some safe money here and start to build out some type of financial plan. And that's what's interesting about this is that I lead with crypto. My whole practice is built on crypto, but you still can't get away from legacy financial planning and getting people to say, well, you know what? Yeah, I probably should look at tax implications of stuff. I probably should look at the estate planning piece of, all right, if I do pass away, is there someone who's tech savvy enough to understand, where, my seed and my private keys and all this other stuff to understand this technology? And then just how do I build wealth? How do I use crypto to make me wealthy? And those are the conversations that we have. I don't custody. I don't transact. And to be honest, I don't actually have conversations about how much crypto a client should have. I mean, I have clients that literally 100% crypto. They don't have any access to traditional markets, and it's more about, hey, you probably should have a 1 to 5% allocation to equities as opposed to a 1 to 5% allocation to crypto. So it depends on the conversation. They are young, they are tech native, and they do see this as a way to build wealth for themselves. And I try and be a guide for them with that, and then answer any questions they may have. So, I put up a tweet that was all this fervor about what a crypto portfolio may look like for financial advisors in the future. I would never advise something like that. That's what I've seen. Right? Like, that's what I've seen. I've seen, okay, well, I've taken a portion of my Bitcoin and I put 1 or 2 away in cold storage. I have 50% left that I'll trade or whatever. I own a large percentage of alts because I'm trying to accumulate more Bitcoin, or I hold a bunch of alts because I believe in the next alt season, the average return I could see will be 500% or whatever. There's all types of goofy reasons that people own this stuff, but I try and try and understand why. Okay, well, you own basic attention token. Why? right? Well, at one point I held Bitcoin Gold or whatever, right? So trying to understand, okay, you have a lot of Bitcoin Cash, but you hold a lot of Bitcoin. Okay, I get it, right? I had some clients in that situation previously. All right, it split on Coinbase. Now I have Bitcoin Cash. What do I do? So they really rely on me to. It's just, hey, am I doing this right? Right? Does this make any sense? And yeah, you can have a 20% allocation to Bitcoin or whatever the case may be. It runs up. That could end up being 75%. Now, if that client doesn't understand rebalancing, if they don't understand tax implications of doing this, if they don't understand legacy financial planning of what it takes to actually, real talk, I cannot make this up as I'm texting you right now. An advisor texts me and says, I have a client that wants to buy Bitcoin. What do I do? That literally just came through on my phone. Hilarious. So, I try and walk them through what it looks like to actually take their crypto and say, hey, listen, there's a world for this inside of, the legacy financial system where you can do all you want to do. And I have resources for that, right? I just had a meeting with BlockFi, right? I had clients right away ask me, hey, should I do this? I'm like, no, let me find out some more. I read and this, that, whatever. Finally had the chance to sit down with Zach and the team there. And we're going to do some really cool things with them. But I had to get comfortable with it first. But there are some clients that say, listen, I have all of this Bitcoin or I hold a bunch of Ether. What do I do with it? Right. I can only, so I try and be a conduit to them, to one, to the legacy financial system, two, to resources inside of crypto that I've properly vetted. And then three, just to be a guide on what to do with, again, when all right, the price jumps 135% this year and everybody on Twitter is jumping out the window. It's oh, here we go again. It's right. Or last year when it was down, the space overall down 80, 90%. I didn't get one message, one email, one text, because my clients know I try and get them to understand the investor's mentality as opposed to the trader mentality of looking at this space. And then we're so early that, all right, here's what you can create generational wealth for yourself, right? And again, there's a lot that has to happen, but there's already been generational wealth created. But the folks that come to me, right, if you have a cost basis in Bitcoin, which is another thing we'll talk about, no one knows their cost basis, but that's a whole nother story. But if I do help clients do deep discovery and figure out their cost basis, like, man, my cost basis in Bitcoin is $200, $150. Now you're talking about a whole different conversation with that client. Now you're talking about, again, being rich or building wealth as opposed to, oh, I just flipped this for a quick, 150%, 200%. And now my $500 is now, $1,500. It's a totally different conversation.
No, that's incredible. And I think that, you being okay with the different type of crypto assets that your clients hold is huge, because I think that if these clients were to go to another financial advisor and they just write these clients off for their holdings without even knowing anything about them, I think that ignorance is just terrible from a tech standpoint and an investment in a new sector, focus. But, I guess just going on with the allocation discussion here, what do you think it is on average for you with your clients? Do you think that, 1% is allocated to crypto among your client holdings? I'm just kind of wondering because, you're the first advisor that's kind of linking crypto with traditional equities and bonds and fixed assets, where in the past, I feel like everybody simply has their advisor for their equities and their normal assets. And then, they also have some crypto exposure, but you're kind of bringing that together here.
Right. So how many of my clients own crypto, or? Yeah,
I guess whatever metric you have. I mean,
yeah. So if, again, just off the top of my head, I can only think of, out of all of my clients, I believe there's only 2 who don't own it. So I would 97%, 98% of my clients own crypto. And then out of that 2, there's 1 who said, she wants to actually start investing in crypto now. We're walking through that slow process of education. She's very liquid, again, young, very liquid. Been reading about it, has questions. She's come to me with a lot of the bad advice and stuff that she's gotten, and we're walking through that. But yeah, my whole, every single one owns crypto in some capacity. And again, the only one that doesn't is my oldest client, and is my chiropractor. And he's kind of in the set it and forget it stage of his life. So he has no reason to own crypto. But so yeah, that's really it. And then as far as allocations, again, I don't really speak to that. I try, because again, I have a very unique situation where folks come to me owning it already. And then I look at it and say, oh, okay, well, I give them advice on what they already own, but it's not like I onboard a new client and they have a full on equity portfolio, whatever. And I'm like, well, you should consider a 2 to 3% allocation to, I haven't had that conversation yet. Not once. And people are like, really? I'm like, yeah, I don't have to have it, which is, and I hope I never have to, but I'm sure I will. But I've been fortunate enough where, prospective clients or current clients have had it, and was like, because that's how this started when I left Merrill. My clients were like, we own it. You better figure it out. And luckily for me, I fell down a rabbit hole myself. So it worked out.
That's incredible. So, I mean, but what you're providing your clients, I mean, when you give them, to be honest, I've never had a financial advisor. I've always done everything myself. But, when you provide your clients with their, whether it be returns or holdings, are you, computing in their crypto allocations and, their adjusted returns and things like that for them? Or is that kind of more on them?
It's more on them right now. So I've been doing a lot of grunt work, as you've seen on Twitter, and me running around New York City, meeting with companies. There's a company called Lumina that we're trying to get to help so we can see cost basis, right? Because that's tough right now. So here's the thing. For me, again, I'm in a very unique situation because I want to empower my clients to self-custody, which they do. And I also want to empower them to be able to have all of that data where to me, it's just, I get a read-only view, again, for planning purposes. So I can see their cost basis. I can see where they own it. All right, they own Bitcoin over all these different exchanges or whatever, a Cash App or Abra or Coinbase, right? And then we can import that information into a full financial plan for them where I can see it alongside of their holdings at Charles Schwab, where we custody, right? And there's just one holistic view. So right now we use eMoney for our financial planning. It's an aggravation for my clients because they have to manually input their crypto positions. And then I could see it all. But right now, a lot of it, what they do is they share it with me, and then I can see it. But again, one of the issues right now is for a lot of the tools that are being built is that the main thing that financial advisors need to be able to give it. Yes, I need to know what you own, right? In crypto, what do you own, right? Where do you own it? That's important. Is it on Kraken? Is it Binance? Is it Bitfinex? Where is it? I need to know that, right? Because that is going to tell me what the next level of, custody we need to discuss. Is it Kingdom Trust? Is it Zappo, right? Where are your assets? The other thing is, right, what is your cost basis? If you don't know that, we need to try and figure that out. Because if you don't, you probably haven't been paying taxes, right? And if you do know, that's great. And what Lumina does, they track all of that. And they're also going to be able to give clients a tax form as well, be able to print out a tax form for them. So I've been doing a lot of grunt work. Again, it's very early. I have to literally build this in real time as these issues come up with clients. So I kind of help them aggregate and get all of these things that they may not have been thinking about together. So the last point on that is most financial advisors will wait until the time where Fidelity says, all right, you can buy it here, you can store it here, and you can see it alongside your equity holdings and your bond holdings and your cash and everything else. I don't want that. And I don't think the financial advisor, the crypto advisor in the future will look that way. In my opinion, we will get paid for our advice. We will not bill on crypto assets. And if it's up to me and my clients will self-custody, I will help them with self-custody and making sure, again, from an estate planning standpoint, a custody standpoint, security standpoint, that they have best-in-class advice and services to do that. And then the conversation is just simply, okay, Litecoin has run up a lot. This is run up. What should I do? Should I take some gain? Should I do this, that, or whatever, right? I have, I want to collateralize a certain amount of DAI to be able to pay down whatever. Or again, we get some type of interest bearing stable coin at some point and clients say, all right, I have a large gain in I don't know, call it, right? Whatever coin it is, I want to take that gain. I want to move into a stable coin that's, providing some type of interest. And then when the time is right, I'll move into something else, right? So to provide that advice and guidance around what they should do. Or again, right, if it's, should I collateralize some of my ETH to get some DAI to pay down debt or whatever? That's where we're going to make, right? We're going to make our hay and provide value. It's not going to be on, custody or our billing model or anything like that. It's going to be around having true expertise in the space. And that's where I want to separate myself. And which is why, I say, again, a Bitcoin ETF, I think, is completely goofy, but it's going to happen because it'll be an easy way for financial advisors in the traditional model to say, all right, we're going to allocate 2% of your portfolio to Bitcoin. We're going to do it here. And then you're going to get a statement and you're going to see all of that, blah, 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 blah. So that will happen, but my practice is not going to be that way. And then any financial advisor, I think, that's really into this space, his practice won't look that way either. It just won't. And when really in-depth crypto clients will want someone like me, and then those that are just on the fringe that just want to tell their people at the pool party or the local, range that they own crypto too, they're going to get it through the guys at the wirehouse or through a regular financial advisor that quote unquote owns crypto for his clients.
It's incredible insight, Tyrone. So, a lot of people that listen to this podcast are obviously crypto native. There's also a lot of traditional finance people, but stepping out of the crypto echo chamber for a second, what's the level of, I guess, education or know-how of the crypto market and assets on the traditional finance side that you see? I guess it's kind of a loaded question because you said a lot of people come with you to crypto assets already. I just want to kind of set the playing field for what we should expect education-wise for people that are new to the space that come to you.
Right. So great question. So a lot of my greatest worry on this next run up, and it will happen at some point. No one knows when. So sidebar, let's stop all that. No one knows when. But when we go parabolic again, my worry is that financial advisors aren't prepared. Institutions aren't prepared. I don't think anyone that's on the majority, if I say anyone, I think most of the people on the traditional finance side are not prepared for the next run up again, because they've been poo-pooing it. It's not really that serious, which is why I always have a little bit of pause at the institutions on the sidelines, and the institutions are the conversations that I've had going to conferences, speaking to people, whatever, and just financial advisors that inbox me, conversations that I have with friends at the wirehouse all over the place. They are not ready for this. They are not ready. There's still a basic level of education. There's still some dismissive opinions and attitudes towards it still. You gotta understand Charlie Munger, Noria Rabini, Warren Buffett. These are doyens. Like, these are gods to guys on the financial, on the traditional financial investment side. And as long as they're pushing that narrative, they're going to run with that. But the wirehouses aren't ready. There's a lot of advisors on the independent side that aren't ready. And my worry is, again, right, that we are the Navy SEALs. And I say that loosely, right? We're boots on the ground. Like, we're the first over the wall, because any new client or anyone that wants access to the space, they usually go through a financial advisor. Like, we're the gateway to this new asset class. And you saw what happened when they didn't have financial advisors in 2017. They got smoked. Those are our clients. Those are our future clients. And financial advisors aren't ready. If Bitcoin went to $15,000 today, and everyone's just piling in, and we make a 100% jump in the next day, and this thing goes nuts again, and we break through 20,000, it will be worse than the last one, because those that sort of run a beginner go, okay, this thing is real this time. They'll be beating down the doors of all legacy financial institutions, and there's just no preparedness. I'm actually doing another podcast in a couple of days, getting on with an advisor who works with ultra high net worth clients to do a literally bare bones, basic financial advisor to client explanation on this space. And the demand is coming, because they're like, all right, we gotta, and not to, it has nothing to do, with me being special. It's just that, all right, here's someone who does what we do, and he understands this. We need to figure out what he sees, and we need to figure it out now. But it's a very basic level of understanding. And from conversations that I've had with people all across the board, There are people who've gone to their financial advisors, and the financial advisors have given them bad advice or given them no advice at all. And then on the institutional side, again, up and down, up and down the structure on Wall Street, they're poo-pooing it. It's like, it's not going to stick. It's not real. They're sticking to that whole narrative. So it's very worrisome from where I sit or what it looks like moving forward. But if I'm going to be the sunny side up version is, again, it would be good for me from a business standpoint, right? Because you would have people saying, okay, I have a guy, or I know someone, or I listen to Tyrone on his podcast. I know I can go to him or whatever, but I'm very concerned about that. But there's, from what I've seen, again, the education level is just, we're still at the bare minimum, of stage of it. So,
No, that's incredible, Tyrone. Like I said earlier, I think it's really valuable that you're okay with clients coming to you and having crypto holdings, because if not, it's kind of like going to a doctor and them judging you for having something, which is, ridiculous.
Absolutely.
So, moving on to the maturity of the space, when do you think we're going to get to a point where people come to you and you say to them, or they say to you, hey, I should have 60% in stocks, 30% in bonds, and say 10% in crypto? Do you think we're ever going to hit that point where allocation just becomes a no-brainer?
Because I'm so enamored with the space, I want to say yes. And the contrast to the point that I just made, you're starting to see a few legacy researchers and guys I really respect start to read the white paper and start to see, do some research here. Nick Majuli from Ritholtz, he put out a piece on Bitcoin and, the optimal allocation, to have in a portfolio. I think we're a long way from that. I really do, because the major issue is compliance, and with compliance comes suitability. When you're talking about those two things, which again, no one ever talks about from our side as fiduciaries, we have to put our clients' best interests first. So until compliance departments on institutional side, asset managers, financial advisors, broker dealers, until they're comfortable with this, it's not going to happen. And then once you do that, right? I was on a panel at Inside ETFs with an SEC attorney, and we were talking about the Bitcoin ETF. He said they could approve it tomorrow. If you are a financial advisor, you have to prove suitability. There is not a financial advisor in the United States of America or the world that can prove suitability of a Bitcoin ETF to the SEC for its clients. I can't. So I'm certain no other financial advisor can. You know why? Because you can't say a Bitcoin ETF makes sense for a client when Cash App exists. You just can't do it. You can't make a plausible argument. So until an advisor can go to compliance and say, I'm allocating 2% of this client's portfolio to this because of whatever. All right. Is it suitable for the client's risk tolerance? How old is the client? How much is going in? What are their goals? Just that if you can't do that, and we're a long way from that, I don't think that's going to happen. Now, technology, and again, as I was saying before, crypto is going to accelerate this because, young folk like you, and all the guys at Delphi and all that are young and going to accumulate tremendous amounts of wealth from this are going to, some point, you guys are going to have to give it up and say, I need help. And then what's going to happen is, again, what I'm seeing already is, hey, I have an IRA, I have a 401k, I have X amount of crypto, whatever. You're going to have all the tools to have that done. All a financial advisor is going to do at that point is now help you curate that to match where you are in your life and what that means for your longer term goal. So it's going to happen whether financial services gets on the train or not. But as far as it actually happening where we're having that conversation, like legally, from a fiduciary standard, we're a long way from that. That
makes a lot of sense. So Tyrone, how deep do you have to go personally on the tech for you to, say, advise your clients on the best routes to take? Like, are people wondering, I'm just wondering the general questions, like, are people coming to you with hey, is Bcash real? Or are they coming to you with, what does multi-collateral DAI mean for the MakerDAO system? And what does the Athens vote mean for Tezos? Or is it more of a, like you said earlier, this is kind of on you guys and I'm more here for the planning and the help and the advisorship there?
Yeah, it could get that deep in nuance, right? I haven't really gotten much on Tezos, but you'll get, multi-collateral DAI. You'll get those types of questions out, I'll get really nuanced questions, but a lot of it is, again, for you, right, would be, fairly basic, and myself would be fairly basic, but for the average financial advisor, they would be like, what the hell is he talking about? What is DAI? Right? Like what is that? That's not something they have an understanding of or even know exist. So what I found is, again, for me personally, again, you help with that, the research you guys put out, and I truly mean this. Like I learned so much, and I learned too much probably, but it helps me understand the projects and what makes sense, right? The proof of work newsletter has done tremendous amounts for my knowledge base and just being aware of certain projects. That's how I found out about Mimblewimble and things like that, right? And then when I'm having an argument with a client about, well, what's better, grin or beam? Like I have these arguments and debates with clients. It's pretty cool, right? So yeah, it can get really nuanced like that, but for the most part, it's just basic conversation about altcoins or utility coins, or what is BNB worth it, or things like that. But I have to get really into the weeds, and I tell people, like, I get literally, I'm crypto from sun up to sundown, and that's because, one, I'm not smart. Two, I'm in love with the space, and I'm fascinated about how it's going to destroy my business. I love it, and I cannot wait. And then lastly, because I almost want to be over prepared and be able to have a conversation with you and be able to talk, some of the tech, right? Or be able to go on with Luke and be able to talk about some of the technical stuff and some of the, the off the radar coins that he talks about, or be on with Pop and just be able to talk about the overall ecosystem, because not only is that a value add for my clients, which I do everything for anyway, clients first, everything that I do, but also it puts me in a situation where no matter who calls or who I'm on stage with or whatever, I'm able to talk to that as a financial advisor, someone from the quote unquote legacy traditional financial system that isn't supposed to know anything. And it just adds to my credibility, not only in the crypto space, but with legacy financial advisors as well.
It's incredible. And thanks for the kind words earlier, Tyrone.
Of course.
I think that what you're talking about, it might seem easy, like, hey, have a financial advisor, kind of get up to speed. But I think that incremental time and that, ecosystem awareness goes a long way, because if a financial advisor has to literally Google what DAI is, or Bitcoin, or Ethereum, that 15, 30 minutes delayed is, a closed deal and a client not served, right?
Yep, absolutely.
That's huge.
Absolutely.
So, you've been pretty vocal on the Bitcoin ETF, Tyrone. I mean, I am of the opinion that it kind of makes it easier for consumers and retail to access it, but your suitability point is definitely well taken. I mean, where do you think the space goes from here, though, in being able to make it easier for consumers to get access to Bitcoin, though?
Again, I would make it very clear. I think a Bitcoin ETF happens. And I've been telling everybody that I will have an epic meltdown on Twitter Live when it does happen. So tune in for that. But it will happen because there's too much money at stake, right? And for large institutions to then lower back in retail and say, oh, you can put it here and we can do it. So it's going to happen. The on-ramps now are better than they were in 2017. And I think, again, I haven't been around crypto from the beginning, but I think people, I've listened to really smart people. Who's listening to Travis Klingon with, Peter McCormick this morning, listening to that podcast, and he said the same thing. It's probably the best it's ever been. He's come late to the space as well. It's the best it's ever been. I have a hard time, right, finding any way easier to buy Bitcoin than on Cash App. And I have every retail app on my phone because I have to have it. I have to do the research. Like, I have them all because I have to look. I have to be aware. Cash App is super simple. Few things that either people don't know or don't care. It goes right into cold storage, open source cold storage at that. Now they allow you to withdraw it. It's not super easy. I've tried it. It's a little clunky. They need to fix it. I've had DMs with them about it. and hopefully those talks come to fruition. Also, what they're doing for unbanked populations as well, but that's a whole nother conversation. And then with Jack's dedication to Bitcoin and dedication to, again, building out Lightning at some point, I don't think there's anything better than Cash App right now. And I think that's indicative by the fact that it's the #1 finance app in the App Store. That says a lot. And you look at their numbers from their last earnings call. I think it was somewhere around 65 million worth of Bitcoin or something like that was transacted. So I think we'll continue to evolve. I do think it needs to be made easier all around. But I think I think one of the issues right now is there's just not enough awareness around how easy it is to access it on Cash App. But a Bitcoin ETF, yes, it would be easy for folks to just, again, if they want to do it themselves. But sure, if you want to put a 10-year-old asset inside of a less than 30-year-old, right around 30-year-old product that financial advisors have gone on record saying, this research says that financial advisors don't understand, and then you want to hit the trifecta by then selling that to individuals who don't understand either of those, so be it. But let's just be honest about what a Bitcoin ETF is about. And it's a money grab. It has nothing to do with making it the most efficient, cheapest. No one talks about cost as well. Bitcoin ETF won't be cheap. Safest, right, way for individuals to access Bitcoin. Those are indisputable facts. And I'll be going on the podcast in a few months, I think next month, to debate this with someone. And again, that's not even talking about suitability and everything else that I mentioned before, but it's a hard thing. It's a hard thing to do. But it will happen, like I said. And I think as we start to see now, you can pay AT&T, you pay your bill with crypto. The announcement during blockchain week that now you can go into Whole Foods or Nordstrom's or whatever and pay with crypto. And, you still, again, a lot of the whatever Facebook decides to do, again, feel how you want to feel about that. What that's going to do is just introduce more people to what it's like to be in the crypto ecosystem. Same thing with JPM Coin and their announcement today. Again, what they're doing with, on the Ethereum blockchain. And again, at Ether. And this is probably part 2 of the podcast, but I started out, Ether was the first coin that I bought. And now seeing how the Ethereum, foundation and the protocol has issues, but I really believe the future of finance is being built there. But long story short, I think when you see what's going on with that, Ernst & Young and a few others, building using the Ethereum blockchain, I think you're going to start to see the underpinnings of making it easier for people to access this technology. And again, the big issue, talk to anyone is that's in design or anything like that, is people need to be using crypto and not know that they're using crypto. Right. And we'll get to that point. But as far as onboarding, as far as having access to crypto and being able to do different things with it, I think we have some really cool. No one talks about, a metal pay. There's so many different, Revolut. There's so many cool retail options for folks. Abra is amazing. Try Lolly, right? Amazing company. So there's a lot of access now, but everyone's just focused on the institutions and not really focused on that. The on-ramps for the actual individual right now is probably the best it's ever been.
That's amazing. Yeah, that's a really good point. I never really understood why we need the ETF for traditional people to access, because they could literally buy Bitcoin on Coinbase or Cash App super easily. Right. And, to your point, if the fees are too high, I don't think a financial advisor could, in their right mind, recommend doing that when there's cheaper alternatives.
Absolutely. And here's the other thing, right? If I can never take my Apple off of an exchange, I have to ride that wave, right? Global macroeconomic news, Trump opens his mouth, the stock is down 10%. I have to ride that wave. I can take my Bitcoin off of an exchange, make sure that it does not trade. And I can put that in cold storage and I can just leave it away and do nothing with it. And then I can have some that I just either trade or I leave on an exchange, or I leave there and just have it do these are all things that's not talked about, right? Sure, the price will move, but the price is independent of you actually having an asset that has no choice but to be there. I can't take half of my Apple position and put it in, cold storage for my kids or something. Like, you can't do that. So I think that's what makes crypto very unique from an estate planning, right? Another topic no one wants to delve into from an estate planning point. It's really interesting. And sure, could you put Apple in a trust and do something similar to that? Yes, but you don't have to. If I own Bitcoin through an ETF and there's a flash crash or there's some type of liquidity event, then what happens? I would have a hard time explaining. You would have a hard time explaining it to a regulator and a client.
No, that's a good point. And Tyrone, this has been amazing. And I want to wrap up with kind of a timeline question here. I mean, you got into Noblebridge about 2 years ago. I'm wondering how the clientele has changed. How your views personally have changed in the space, and I guess anything that you've noticed that's significantly different with your client base versus when you started 2 years ago.
Great question. That is a very solid question. I think personally, a thing that changed for me, as I mentioned, right, I've become, I'm not a Bitcoin maximalist, but I've swayed more towards the value of Bitcoin and what that looks like. Again, as I forget who said this, but a call option on the store of value. I think that is the best description I've ever heard of Bitcoin anywhere, and I forgot who said it. But call option on the store of value. That's once I heard that, and again, still reading and learning, I'm like, man, this is it. That's really what it is.
Yeah, my partner Kevin always says that the option on digital gold. It's one of his catchphrases at this point, and he explains it really well in one of our reports too.
Yeah, and I think that's where I've kind of changed. I've gone that way, but again, now I'm going back the other way, with my fascination. Again, reading a lot of your stuff about the Ethereum blockchain and everything that's happening there. 0x, I'm fascinated by a bunch of different things, and again, the future of decentralized finance, open finance, whatever it's called this week. But so that's that with me personally. And I think that just part B of that is just simply how my business and financial advisors' business is going to change. I always thought the thing was, clients are going to want to own crypto. And I thought that was the thing. And when I finally went bigger and I expanded my thought process, I said, it's not even about whether this is a security or not. I'm like, this whole thing is going to decimate our business, security tokens, the whole deal. I'm like, this is different, right? So that's that. As far as clients, I've actually been shocked at and again, this may be a function of, again, being around people who are really savvy and being on podcasts and being on stage at Consensus or whatever. But the folks that have come to me are very knowledgeable and they're young, very young. So, I mean, my youngest client is early 20s. And some of those that I'm in talks with now are very, very young. I mean, I have a startup founder that I advise. He's developing a decentralized exchange, and he's killing it. I can't wait for him to launch this thing. But he can't be older than 22, right? So just super young, and but just very, very savvy. So that's probably been the biggest surprise about how clients come to me, and on one side, very savvy about crypto, but on the other side, don't know anything about financial planning, personal finance, savings, this, that, or whatever. That part is really alarming because you have a lot of people who come, this is their first investment. This is the first asset that they've ever owned. So they don't really understand money. They don't understand finance. They don't understand They don't understand any of that.
Just switching back though, I mean, do you think that more people 2 years ago, more of your clients were more like how do you think the Bitcoin story has changed for them? Like, do you think people were more into only Bitcoin 2 years ago and now we're moving into alts and other ideas? Or do you think, that's the reverse now? How do you think that narrative?
It's the reverse now. I think what I've seen is more people are realizing the Bitcoin story now. Where before, like when I first started, it was whatever I saw on Coinbase. Right? Let me buy a little bit of these, right? I had a client with a massive, when I say massive Litecoin position, like ginormous. I can't even begin to ginormous Litecoin position. And the dialogue and conversations that we had around that, but he got in super early, and he made a ton of money, big real estate guy. And he was just kind of like, all right, this is what I saw. I'm going to buy some or whatever. Ripple was another one, right? That people were just like, all right, I see it. It was on CNBC, I'll buy some. But now it's evolved more into, all right, well, how does Bitcoin play a role? I'm hearing about it. It's starting to, again, it's the I don't know, what do you want to call it? The Apple or the Amazon of the crypto space, right? It has the biggest brand. Everyone knows it. It's the easiest to access. So, and everyone talks about it. It dominates the headlines. But it's become more of a Bitcoin story. And I think that will continue to evolve. And I don't know if people are modeling this in or whatever, really smart people who are doing all this research or whatever. And some, Tor Demeester and a few other folks, the millennial story. But I think once you get those who are 40 to, let's just say 55, and then looking at it, okay, well, my window to retire is somewhere between 10 and 25 years. And then they are really in that, they're high earners. They want to start to allocate to this, and then they push into it. It's going to be Bitcoin. It's not going to be, Japanese content token. Yeah. It's not, right. It will be Bitcoin. So I think that's not talked about enough. And because, again, some of the larger, the wealthier folks that I know that just come to me and ask questions about it that don't own crypto, their questions are always about Bitcoin. It's not about anything else, right? So, again, like the text I told you I just got literally on my phone. That's about Bitcoin. It wasn't about, how do I buy, whatever.
Tyrone, what do you think do you think, though, that's kind of like the nature of where you're positioned, though? I mean, kind of dealing with, people that might come to you a little out of the crypto ecosystem that might be more traditionally focused. Like, do you think in 5 or 10 years, when other coins are potentially successful and, roll through the ecosystem, that people might come to you and say, hey, I like, take your pick here, Maker, Tezos, Ethereum, et cetera?
Mm-hmm. Yes. I think, again, if you are, I said this on one of my lives, if you are a financial advisor, you should get very familiar with the Ethereum blockchain. You should get familiar with Ether. You should get familiar with anything that has anything to do with the Ethereum blockchain, because I think that is going to be a situation where we're going to get clients who are transacting in this world, right? With Maker, with DAI, with 0x, with whatever. And that is going to be the dominant, right? The dominant, it's almost as if, again, you have a portfolio of stocks, right? And you have your bellwethers, right? You have your Johnson & Johnsons, your Pfizers or whatever. The minute you start portfolio construction, which again, I don't think financial advisors should do, but if they were going to, it would be, all right, let's just get this out of the way. You're going to have a core holding of Bitcoin. And then it will be made up, again, back to that tweet, right? It'll be made up of all of these other, components, right? They may have a few STOs or some alts or whatever the case may be. But I think for me, and again, this is my opinion, we'll see if I'm right or wrong, but I think if you are in financial services, if you are only focusing on Bitcoin, that's a bad idea for now. But as you start to learn more about crypto, you definitely should pay attention to Ethereum. You should pay attention to, even listen, feel how you feel about it. Stellar, some other things that are going on there. And some of the privacy options as well. I think that's going to be interesting. Again, you saw what, JP Morgan is doing. The reason they're doing that and even looking at zero knowledge proofs is because the whole thing was, okay, well, why would we use an open, right, public blockchain? Why would corporations use that? So people could see exactly what they're transacting, how much, what it was for, this, that, or whatever. They can't have that. But if they can have some type of, right, open public blockchain that they can, encrypt and hide some of the transaction data, that's huge, right? That's massive, right? They're doing that using, Ether. So if JP Morgan is doing it, right? And I there's a presentation I saw a little while ago. Can't forget the woman's name. She said, watch whatever JP Morgan and Goldman Sachs do. Whatever they do, pay attention to it. And boom, there you go. Yeah, no,
I couldn't agree more, Tara. My last post, Crypto Evolution, I kind of argued that. I said, follow the devs, follow the banks.
Absolutely. You got to. I mean, you just have to. So, yeah, I think you got to follow what those two are doing. And again, the minute Goldman makes some news here, whether it's around custody, whether it's whatever, you immediately go that direction. And I think JP Morgan is letting advisors and those at finance know indirectly, hey, over here, Bobos, right? You better pay attention to Ether. And if you don't, it's a world of hurt coming.
Couldn't agree more. Well, Tyrone, this has been incredible insight and definitely differentiated versus our last guest. So I really appreciate your time. And, before you go, where could we find you on Twitter? Where could we find you on your website? How can people get in touch?
Yeah, so this is the first podcast that I've done since my website is going live. It's Tyrone Ross, TYRONEROSS.io. So you can find me there. The link to my Twitter is there, which is TR401. And then the link to my LinkedIn as well, as I do a lot of yammering and posting content on LinkedIn as well. It's just my name, Tyrone V. Ross Jr. And that's it. And, just hold your hands out, catch all this free jewelry I'll be dropping.
Well, for everyone listening, Tyrone will be linked in the show notes on his Twitter and his website as well. And Tyrone, thanks so much again for your time.
Absolutely. Thank you for your time. Cannot go without saying I am extremely grateful to you and all of the folks at Delphi. I learned so much from you. I'm grateful for you having me on. I know you could have spent this 55 minutes with someone way smarter than I. So I'm extremely grateful to you guys. And I mean that you help me because you give me credibility. You give me social capital. And again, as I told all of the guys there, Neil and everyone else, I have clients coming to me now saying that they read your research. So that's powerful. So I'm grateful to you extending your platform to me and giving me some time to chat. And I appreciate you.
I really appreciate that, Tyrone. The road runs both ways here, and it's great to hear that our research gets around. And I wouldn't have rather spent this 55 minutes any other way than with you here. So I appreciate that.
Awesome, man. I appreciate that.
Talk soon.
All right, brother.
Hey, everyone. Thanks for listening to the podcast. Please rate and review to help other people find it, and shoot me a follow at Shaughnessy119 on Twitter. And be sure to visit delphidigital.io and use coupon code ChainReaction to make sure you receive all of our research analysis.